All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we are going to get started. We have, obviously, we have some analysis to get through, and we're going to start with the euro dollar as we normally do. So here's the euro, and as we had planned on last week, and I just say, for those of you that have been waiting for the euro dollar to get up to these levels, good on you. Kind of staying patient. Friday we finally broke into the 113s and has allowed, it obviously gave us a little squeeze and maybe even a little bit more than we bargained for, but the euro dollar did push through the 38% retrace, and I think a lot of this move was basically squeezing what a lot of traders might have had some shorts in, probably took out those highs just enough to get some shorts squeezed out. And you can see we even overnight we spiked up into the 70s before reversing. So I think the euro dollar has probably cleared out a lot of those a lot of the shorts just in what has happened over the last couple of days. Now, what you probably have noticed as well is relative strength has been diverging as the euro dollar was stabbing higher. And we finally have come back down again. Now, this support right here, and you can see all the wicks. This is the hourlies. All these wicks are really important as far as where we're at currently. And I would assume at this point, if the euro is trading above 113, you're going to still have buyers in there looking for a move back up into highs. It's if you dip below 113, I think that's where the sellers are really going to start to step in. Okay, and you can also see it this way too. If you're looking at it from there, you could probably do this, and it's giving you basically the same look. If you drop below 113 today, you're probably going to see some selling pressure come in. And as long as we're trading above 113, the risk of a move back up towards 113.70 is still, I think, still pretty good. So if you notice that yellow line, now that yellow line was this trend line that came through, and I can't remember who on Friday had showed me this trend line here. And I'm sorry if it was you out there. I don't, whoever you is, whoever had brought that to me. I think you're pretty right. We've got another trend line that had come through that might be capping us, which could be the case. But at any rate, I'll look at it more like this on an hourly basis. As long as we're trading above 113, okay, that's that's where it's holding up well, and a move to 113.70 is not out of the question today. Okay, so for today, 113 is support. I think that's really key support for the day. That's what's keeping the bulls engaged. This is, a lot of times I like to refer this to as the bull bear line, meaning while it's above this line right here, it's bullish, okay? And while it's below, if it gets below that line, it's bearish. So we got the bull bear line. It comes in right around 113. All right. Resistance 113.70. Okay. And we're in a range environment. We are still in a range environment. That's kind of what it's looked like, and we are, just kind of range bound. Trying to. I think obviously after this week, you'll probably set the precedence in which way we're going to go. All right, let's take a look at the cable. Now the pound dollar is holding above 154, and as I said, I said a little bit earlier, as long as we're above one, or if we drop below 154, that's where the sellers are. It's probably going to pick up a little bit. All right, the selling pressure. So 154 is key support, and that is going to be support for the day. Okay, right there, and we're getting close to probing that support. But it's kind of like the euro dollar. It's the bull bear line, Okay, it's the, as long as we're above 154, you can't be too bearish. But if we get below 154, it's probably going to expose some downside pressure. Now you'll notice that the resistance though is right there, the overnight high, and we can write down 154.75, right? If we get above 154, 154.75, that's going to really allow us to start squeezing. The other risk also is if we get above 154, 154.75, we could just turn around and tag this 50% retracement, if you will, at the 155 level. It's possible, just to hit that, stop out some shorts, and then reverse. So you have to know that that 50% retracement resides just above those highs. But 154.75, that's key resistance today. We're in a range environment. Okay, let's go over the Swissy. Now the Swissy, I picked up some Swissy on Friday. My cost average is 97.13. I bought some as it dipped, down to 97, I think 20. Then I think 23 is where I bought it on Friday, and then I got hit on a bid at 96.85. You guys know I had a bid out here, and I should have just left. I should have just left the bid out there and not try to wiggle my way in to. Oh my God! I just said something really funny. I'll have to. I'm gonna have to. I'm gonna have to stop for a moment and and um and tell you guys a funny story. Oh my gosh, it was so funny. Okay, so I'll do that after I do this analysis. But you can see really key support on the Swissy came in at 96, 85, and that's where my bid was. But I bought some on the way down on Friday. We were down here, and I bought some like right here, somewhere around here. I bought some more down here, and so my cost average is 97.13 now. Okay, so I'm out of the money a little bit, but I'm holding on to it. It's not a huge position. It's just it's just a position I'm trying to take ahead of the FOMC, because I still believe that if the dollar breaks out, I think the dollar breaking out here is going to be pretty aggressive. We have these big downtrend lines, that multi-decade long trend lines that will obviously come into play. But I have to say something about Wiggle. So it was Saturday night. Okay, it was Saturday night, and I'm going to write down this information, by the way. 96. Wait, what's the low? 96.66. So we'll just write 96.70. Nice little hammer developing there. So we have a lot of time left in the day. So 98 cents, 96.70, and I'm just going to leave it at that. It's range bound, but getting real close to being bullish. Okay, 96.70, and that's a key level support down there, and 9800. Okay, so Saturday night, my wife and I, we were celebrating our anniversary, and we are in Sedona, Arizona. And Sedona is one of those. And if you're not from the United States, maybe even if you are, and you don't know what Sedona looks like, here, let me just pull it up for you so you have a good understanding of this is what it looks like in Sedona. These red rock formations are so beautiful, and this is a really good picture of kind of representation of what Sedona looks like. It's beautiful, beautiful, and we stayed in a great resort. It's really nice, nice place to celebrate our anniversary. And you can see just some of the red rock formations and whatnot. It's a gorgeous place. Anyway, but the town goes really quiet on the weekends. It's notorious for like just super quiet. It's a very spiritual place, but like there's nothing to do. I mean, it's a Saturday night, and there's not a whole lot to do. So we go back to our hotel, and we were having some cocktails out by the golf course, because there was a wedding that was taking place, and it was it was a small wedding. It wasn't a huge wedding, but they were having the celebration on the veranda or whatever, and they were they were dancing, and my wife and I we it was so entertaining. It was so entertaining that we sat out there for 2 hours and we just drank cocktails by the by the golf course and watched these. It was very Caucasian group of people, and the whole celebration. I think they played all rap music, which is very interesting. But what was more interesting is watching the people dance. The people that probably shouldn't have been dancing, that were obviously consuming a lot of alcohol at the same time. Very entertaining, I tell you. And then what was even more entertaining is after the wedding was over, they they said we're going to the bar, and so my wife and I we beelined it for the bar. We actually made it there with there was a couple other couples that were there. We made it there before the wedding party came in, and that was even more entertaining to watch the wedding party at the bar after the fact, after the wedding was over, and it was something. I tell you, it's great. It's nice. It's really nice to watch everybody having such a great time, though. That was probably the best part about it. Anyway, okay. So here's the yen, and one of the things that I mentioned on Friday is I'm staying away from the yen. I do have some pound yen short exposure still, and I shorted some euro yen on on Friday. I don't know if you guys, some of you guys probably don't know this. I'm up like 40 pips right now, but I shorted because we're at the 618. Okay, um, but I'm staying away from the dollar yen. I don't know how to read it, and because we made a higher high, we made a lower low. I'm really, not clear on how to read the dollar yen at the moment. But with stocks coming down, um, it may give the yen a little bit more strength here. But regardless, um, the dollar yen, I'm assuming this right here is support, but you can see right through here. I'm assuming this is pretty decent support, but actually, any move down to 120, probably going to find some buyers. But you have to imagine the sellers are lurking right here around 120.50, somewhere in this neighborhood. So I'm just going to say 120 to 120.50. And we are still in a bearish trend. Now, when I say we're in a bearish trend, the thing is if you look at the structure of the daily chart of the dollar yen, this move below this support right here, this aggressive move, okay, that you can see through here, that was extremely bearish. And what we've been doing is just been consolidating now below that trend line. But this is a very aggressive move, and I believe that there's probably more to come eventually. That's why I'm keeping it as a bearish trend. Um, Now that doesn't mean we won't find support down here. It's we'll get down to 119 and change and bounce back. It's really longer term. The longer we hang out below this 122 level, the more bearish it is, in my opinion. Okay. Now we'll just keep an eye on it though, because we obviously have to keep an eye on equities. It's if equities roll over, that's where it's going to get that's where it's going to get kind of bearish. And one of the other things that you have to look at when you're looking at the dollar yen, keep an eye on the Nikkei too. Nikkei's it's trading really heavy, and we broke through some support in the Nikkei. I think it was last. Well, I was thinking that we would hit the resistance up here, but we've cracked through some of the support. I thought we are actually a little bit lower than we are, but you can see that the Nikkei is trading kind of heavy too. And so if the Nikkei starts to pull, push lower down towards support, that's what's going to drag the dollar yen down, in my opinion. But anyway, let's go over the Canadian. So the dollar Canadian, I did buy some at 132.12 is where I own it. I picked it up on Friday. You can see we're still consolidating in this triangle, and we're trying to bust higher, but we're capped right now at 133.25. Oops. And even on Friday, we spiked up into the 133 level. Okay, but came down. Um, Support is at 132, resistance at 133.20. Okay, 132, 133.25, I think is really the resistance. And it's bullish and it's winding up really tight. Okay. So there's the dollar Canadian. Let's go take a look at the Kiwi. So here's the Kiwi, pretty tight consolidation, and despite of the Aussie rallying, the Kiwi is still struggling, and you know I still think that there's a chance that we can get up to 63.50 after last week's very dovish RBNZ event. But listen, if we make it up to 63.50, it's probably a great short up there. The scary thing is the Aussie is, the Aussie's rallying and then the Kiwi's not doing anything, which means if the Aussie starts to pull back, it's just the Kiwi's just going to probably fold. 63.50, 63.55, now 63.50, and 62.40. Okay. And it's bearish. Okay. Now the Aussie managed to take out 71 cents, and that in itself has neutralized this bearish trend. Okay. Now I'm not saying that the Aussie won't go back down, but this move above 71 cents has really opened the door for the possibility of a move up to 72 cents, maybe even 72.20. Now, I'm long the Aussie, not the Aussie dollar, but I'm long the Aussie on the crosses, okay? But I'll tell you what, if the Aussie can make its way back up towards 72.20 or so, right up to here, I'm going to get on the short side of the Aussie if it can get all the way up there, all right? But I think it is possible right now. Okay, it is possible that the Aussie makes its way up there. You can see we are attempting right now we are attempting the you know inverted head and shoulder pattern, okay, which will take us towards the 72 20 level. I'm hoping that's where the Aussie gets to. If it gets up here, it's probably going to be a decent short. And I don't know if I'm necessarily going to short the Aussie dollar because I think the Aussie still looks pretty good on the crosses. What I may do is take some profits in like the Aussie Canadian. Um, since I'm now up 130 pips and I'm just kind of sitting in it and might want to take some profits if it makes its way up there. But the Aussie itself, being short the Aussie dollar, it really depends. And I'd rather actually be short the Kiwi than the Aussie. So, but anyway, so support will be this hourly spike that you can see here on the 4-hour chart. Okay, that's where support's going to be. It's right through here. Now resistance, and that comes in at, I'll just write that down. It's at 70.65. Remember that 70.65 was a really tough resistance on the way up, if you don't recall, right? 70.65 right through here, right through here, right through here. It was really tough. So now that we've made it beyond that, it's dips. The dips there are pretty solid. Um, Let me see something really quick. Okay, so even if we hit new highs right now, the 161% extension is at 71.46. So I would say 71.50, good resistance. Okay, on the way back up. So 71.50 for today. And this bearish trend, like I said, it's been neutralized. We're in a range environment with the Aussie. Okay, not saying that it won't turn lower. I'm just saying that you have to be very careful to being on the short side now. I think you can play both two-way action at the moment. Um, Let me go pull up the dollar index really quick. Okay, here's the dollar index coming, right? And so we did get a little dip here, and this support held, which is basically 95 cents. And a nice little hammer that we're creating right now in the dollar. Keep that in mind. Okay. So if the dollar stages a rally, in the next, maybe even, I mean, I don't think it's going to aggressively move up like this today. I may be wrong, but 95 and 3/4 supports at 95. And we're in a range environment. Okay, when I come back, we'll look at the Swedish krona, Norwegian krona, the peso, and then I'll start taking some of your questions. So thank you all for being here. Happy Monday to you. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to take a real quick look at the peso, Swedish krona, and Norwegian krona really quick. And you can see the peso is actually just very range bound here. I think John in our chat room on Friday, he ended up picking up down here at support, made some good money, which is great. But you can see we're just really in quite a tight range. So not a whole lot to do there with the peso. Very bullish. We're in a very bullish trend, though. Don't misunderstand me when I say that we're just kind of range bound. We're range bound in a very bullish trend in the peso. It's just not really doing anything at the moment. Here's the Norwegian krona. Came close to support, but also very bullish trend. Just came down towards support over the last couple of days, but I don't think it's close enough for those of you that can trade it. I don't think it's close enough to be on the long side just yet. Like if I could trade the Norwegian krona, I'd try to buy it if it dipped right here. By the way, watch the cable. We're getting close to 154. Here's the Swedish krona. Now the Swedish krona had a bad day on Friday. There was a multitude of data that came out, and I can't remember all of it that was on Friday, but it was like I think it was GDP and maybe some inflation data. It was all very strong for Sweden. So the Swedish krona came down as the euro rallied into 113 or whatever. But you're seeing a hammer right now, and you can see we're at the upper end of our range today. Um, if you wanted to buy the U.S. dollar Swedish krona and put a stop below 817, you could do that. But it's a lot of distance between where we're currently at and 817. Especially if you think about it, it would be even below where today's lows are. But um, there's a lot of support down here about 820. If you can dip down towards 820, for those of you that can trade it. uh, but it would take a lot of work to get down there. That daily candle wouldn't look that pretty if we may even made it down there. Okay, so I think there might be better setups, you know, other than the U.S. dollar, Swedish krona. So here's your bias chart, and what I'm going to do is I'm going to take a few questions. So